Good evening, it's Quantrade Edge, and today we're looking at the gold market. About 3 days ago, we had a little discussion in the comments where someone had pointed out this hoagie, this daily hoagie in gold. Right here where we had this 2 bars inside of this 1 bar. And they were mentioning that they wanted to go long as soon as we took out this level here, the previous day's high. Just blow this up obnoxiously big so it's easy to see. They wanted to buy stop into this, and that's fine. I just said that I'd prefer to buy stop after this level to get a little more confirmation. Now this is February gold. We were talking about December gold at the time. Same thing, just to the lower price levels. So 2009.8 was sort of my buy level, and theirs would have gotten ahead of me by $1.50 here at 2008.30. And what ended up happening was when that level broke, it all broke in the same, pretty much same 5-minute bar, maybe 2 bars. Yeah, so the first one broke here, second one broke right there, so both of us got in. And when you look at it on a 30-minute basis, you had this big move up, and then we had a hoagie for a day and a half. This 30-minute bar, really all the way to here. This is 7 p.m. on the 26th. We didn't break out till 7 a.m. on the 28th. So basically 36 hours inside this hoagie. And then when this hoagie broke, which happened today, I took it back down to a 5-minute. When the 30-minute hoagie broke, we got a 5-minute hoagie. Right? So again, this is the bar. I'll put in my high-low day indicator. This is where it broke. And then now, all of a sudden, we have this 4-bar hoagie. So when this level broke, when we have a 4x type trade, we either get a move and then a clear ABC down, or we get a hoagie on the break itself. And what else could have tipped you in that this was the hoagie that you wanted to buy? You guessed it, this volume right here. This was 4,568 contracts, higher than any subsequent volume, higher than any previous volume. Now, if you remember, this was in a hoagie, so that would be low volume. But really, even looking back, it doesn't, it's very rare to have this much. So that original breakout had as much volume, 5,400 on a 5-minute bar. And before that, it looks like this breakout up here at 6,300, but it's very rare to get that kind of volume. So today, when we broke out of the 30-minute hoagie, which was also breaking above the previous day high, we made our own hoagie on this extremely large volume bar. So your risk would have been taking out the top of that hoagie and down to this low. You don't even need to go down to this low. This low was 18.4. This high was 22.9. So that's about $4.50. So $4.50, $18 would be your 4x. So 40.9. 40. Oh yeah. So 10:45 a.m. So basically 8 a.m. to 10:45 a.m. you got your 4x. If you continue to hold it, you probably got a little bit more now. This was 40.8, 52, called another 2. We're up to 6x at this point, or 6R. Today was the last day of trading for December. I did get auto liquidated on December, and thankfully I was watching, so I rolled right into February when that happened. and the rally continues. So, the weekly structure looks extremely supportive. I don't see any resistance until this here at 2085. And this is 2078. So, we've already had 1, 2, 3 tops in there. There's not going to be a fourth one. This one's going to go. Even triple tops are rare. So it's pretty rare that we saw this triple top here. It's really acting as more of a cup and handle. And this is a monthly chart of gold. This whole run up here, this is your cup, this is your handle. When this goes, it's going to go pretty good. So anyway, I just wanted to point out that pattern. We've been talking about it in the comments, and you were probably following it on gold. But that's how breaking down the Daily Hoagie, which broke a couple of days ago with a 30-minute hoagie. This one right here, which broke again with a 5-minute hoagie right there. That's what we do.